Hello and welcome to the latest video update for the Henderson High Income Trust. I'm joined by Fund Manager David Smith. David, thank you for joining me.
Thank you, pleasure.
So we're coming up to the halfway point in 2019, so perhaps it would be quite nice to reflect briefly on the first 6 months of the year in terms of performance and markets generally. What's your take been?
Well, the markets have been strong globally, the equity markets. The UK FTSE All-Share is up 70% year to date to the end of May, and I think what's driven that really has been a sort of bounce back from the lows we saw in Q4, but also central banks across the globe have actually become a lot more dovish. So we're expecting probably rate cuts rather than rate increases where we were thinking this time last year. The trust has actually performed well, so the trust NAV is up 12% over that time period. Nicely, good at absolute performance, but good to see us outperforming that benchmark, that index as well. I think the key drivers for us within the trust has been our financial exposure, so where we own the likes of Jupiter, Intermediate Capital, Phoenix as well, the life insurance. These companies really benefited from that strong market conditions, but also some of the results coming out of those companies have been robust over that time period as well.
And keeping with the portfolio, has there been much activity in the second quarter of the year?
Yeah, I think we've previously talked about trying to go a little bit more defensively with increasing the bond exposure. I think within the equity portfolio, we've also focused on trying to go a little bit more defensively in there. What I mean by that is buying some of those companies that are not generally, or their profits aren't really linked to the global economy. So one of the new additions is Sanofi, the French pharmaceutical company. So yes, we're a UK equity trust, but again, utilising our ability to go overseas. And we're buying a pharmaceutical company, typically a French one. We like the company fundamentally as well. Don't get me wrong. We've got a new management team in there, very focused on cost efficiencies, improving those margins. They're a lot lower than where the competition are, but also reinvigorating some of their research and development. Really focusing on the drugs they've got some core competencies on. So actually, that should help drive the top line. In the years further out. So I think shorter term we've got a good margin story. Longer term, I think we could potentially have a good growth story coming through. You look at the valuation. It looks pretty attractive versus the sector, and the dividend, yielding about 4.5%. That's quite attractive, given we should see dividend growth to top that up as well.
Now, David, lastly, I wanted to touch on the investment trust structure, for which there are some benefits over open-ended funds. For example, the ability to withhold revenue for a rainy day. So as a trust focused primarily on delivering a high income stream for shareholders, what's the approach for paying shareholders and contributing to revenue reserves?
Yeah, certainly over the last couple of years, I think it's been a prudent balance between the two, focusing both on paying the dividend and trying to grow that dividend, but also putting a little bit away into those revenue reserves. The objective of the trust is to provide that high level of dividend. Although not a specific objective, one of the aspirations of the board and me as manager is to try and grow that dividend into the future, as long as it's sustainable into the longer term. If you look at the track record over the last 6 years, we've actually grown the dividend around about 2.5% per annum over the last 6 years, which is slightly above inflation over that time period. At the same time, we've also put that money into revenue reserves as well, and actually we've grown revenue reserves up to about 9 months worth of dividend cover as of the end of last year. So I think we've done a good job, certainly in the sort of medium term, of being able to balance those two, and I think that really does set the company up in good stead if actually the outlook for income becomes much more tougher from here.